There's been a lot of focus on anti-money laundering or AML issues in Singapore, or combating the financing of terrorism, CFT. Singapore is a member of the Financial Action Task Force, or FATF, and Singapore is going through an FATF evaluation later this year in 2015. So it's not surprising that across the whole spectrum of regulated industries, financial institutions, and now corporate service providers, there's been a lot of focus on putting in place robust AML frameworks or enhancing AML frameworks for financial institutions. There was a national risk assessment done in January 2014. This was an assessment of Singapore as a jurisdiction. And one part of the report mentions that there's been an increase in money laundering cases involving shell companies, where there might not be any legitimate business, and these companies might have very minimal paid-up capital. But there's also a concern that there could be authorized bank signatories of these shell companies who might not be Singapore residents. It could be persons based overseas. They could be directors or shareholders, but they are operating bank accounts of shell companies in Singapore. The concern is also that for a service provider based in Singapore, they might not have knowledge of the full picture, what's going on really behind the transactions in the shell company. And that was why the regulators felt it was important for corporate services providers to be subject for the first time to AML, CFT, customer due diligence processes.